Hey there, welcome to Money Never Sleeps, a podcast that looks inside the head of entrepreneurs and at the crossover of startups, enterprise, finance, technology, and life as we know it. I'm Pete Townsend, your co-host on Money Never Sleeps, along with Owen Fitzgerald. This episode of Money Never Sleeps is kindly sponsored by Ireland's fintech and financial services recruitment specialist, Top Tier Recruitment. If you or a colleague need help attracting and retaining great talent for your fintech or financial services company, it is highly advisable that you build a relationship with the team at Top Tier Recruitment as they really know their stuff. You can find them at toptierrecruitment.com and tell them we sent you. For more of the written word, you can subscribe to our Money Never Sleeps newsletter at moneyneversleeps.substack.com. We also launched our new website last month, so check that out on moneyneversleeps.ie. This week, we take a look at the TikTok deal as a bellwether for change and how entrepreneurs outside the US may be looking at the American market going forward. We take a peek inside the now profitable fintech unicorn TransferWise, and also a few other tidbits that Owen and I found interesting, all packaged up as this week's episode of Money Never Sleeps.
Money never sleeps, pal.
Here we go again. How's it going tonight, Stretch?
It's going good. You know what? I'm pumped up. I had a good day today. Busy day. I was connecting people, all that sort of good stuff.
Are you a connector?
I am a connector. I missed that. You know what? Someone was asking me today about going back to the office and things like that. I was like, oh, God, never want to go back to the office. But I do miss meeting people for coffee, having a chat, and then being like, oh, do you know what? You should talk to that other person about that thing. I miss doing that.
I know. There's a lot of antisocial behavior that's happening because I'm just sitting here in this lovely house in Stepaside for, 10, 12 hours a day, try to get out for a little bit here and there. I nearly ended up out in your neck of the woods in lovely Kildare in Naas. Oh, yeah? I let my driver's license expire. Didn't even know it. My wife asked me last night, she's like, can you take a picture of your driver's license front and back so that I can send it in for my new insurance renewal? And I said, yeah, absolutely. She's like, when does it expire, by the way? I'm like, today? And because of lockdown and backups and everything, the closest center to me that would actually take me for an appointment at the end of October to renew my driver's license was in Naas. So it's completely out of control, and I don't know what I'm going to do. But I'm off for insurance now anyway.
I have to do my NCT. It was up at the end of August, and I went to renew it. And the next date is the 23rd of November.
Yeah. Now,
I mean, I could go to Dublin and get it next week, but I can't go to Naas until the 23rd of November. And
just for all of our American listeners that our podcast host Anchor are telling us that we've got loads of. The NCT is the National Car Test, and it's a complete money racket here in Ireland that once a year you need to go get your car tested, and they look at everything. And my car actually failed once because the child seats were not in tight enough, and these weren't even like real child seats; they were booster seats. And I'm like, how do you actually secure a booster seat?
You can't tighten them. I actually think they're kind of useless.
So anyway,
that's how I'm doing today. Missing the connections.
Good man. Me too, in a big way.
Plus, I've been missing our chats. We haven't had our Money Talks chats.
I know, it has been a while. This is now episode 104. We did episode 101 with Ambre. We did episode 102 with Gene Evans. We did episode 103 with Jill Richmond. You should have been 102, but I'm doing every second episode. But so's life, right? So let's get started. I picked out a couple of stories here that I think should be interesting, that I kind of started wrapping my head around and did a bit of a rabbit hole dive down into just to get some more detail and things that are interesting and fun, but getting right to it. First story, what the US and China's tussle over TikTok means for Europe. And this is from Sifted on the 23rd of September today from Nicholas Collin. What we are doing here is revisiting a story we covered on episode 97, which was entitled Microsoft Goes TikTok and Monzo on the Clock. But Microsoft didn't go TikTok. It was Oracle and Walmart that went TikTok. And there's a good overview of that deal on Motley Fool that we'll put in the show notes. But what we wanted to talk about was how the article opened with this quote, "Welcome to the Splinternet. Today's fragmented version of the internet in which we're not connected with one another at the global level anymore." So it's like all of these different battles that are going on, and what started in China, obviously, with the kind of the walls that they were putting up around how Chinese citizens access the internet, and what came of that, and that's been building up over the last 15, 20 years. But now with the Trump administration and the ban on TikTok, and what has now ended up becoming a separated, splintered company, but also a separated, splintered internet. What the article is doing is saying there's 4 different things that are coming from this that are perhaps challenging the future of how startups, enterprise engage across international borders, how they do business, right? And how they grow and scale. But before I get into those 4 points, what's your initial thought on this, Owen?
I suppose the funny thing is, to a degree, that it's become such an issue when, like, in reality, China's been doing this for years. And everyone's been like, "Oh, that's terrible in China," and now all of a sudden the US are deciding to do it. It's surprising in some way that other geopolitical powers haven't done this. But I do think it's becoming more and more of an issue, and it's kind of a massive impact. And even not in the same way, but like the Data Protection Commissioner's announcement around the transfer of data from Facebook, from the EU to the US, like that plays in as part of the whole thing as well. Because does that then mean that for a different reason Europe is cut off? And it becomes that you have the US and its rules, and you have Europe and its rules, and Asia and its rules.
Yeah.
And then it's not, like you said, an open internet.
Yeah, and that was kind of the whole thrust of the article, was saying, listen, Europe's kind of in the middle of all this, and which way should Europe go? And one of the first points that came up is that it's this political maneuvering and vanity actions, whatever you want to call it, are degrading the U.S. as a good place to do business. And again, that's quoting from the Sifted article. What it also references is that a number of companies have already crossed the threshold with the U.S. government, but there was a legislative basis to how they crossed that threshold of pain, more or less, and they've seen the full wrath of the U.S. government come down on them. Alstom, Siemens, one company that I'm very familiar with, having worked there for a very long time, BNP Paribas, and this is all public information, but they got a $9 billion fine for doing U.S. dollar-denominated deals in 2 countries with economic sanctions levied against them, Iran and Sudan. And this was just trade finance deals that happened to be denominated in U.S. dollars that did not touch, was just the fact that they were done in U.S. dollars. So that's how far the tentacles of the U.S. go. Speaking of which, tax returns are still a thing for me, even though I've been out of the U.S. for 20 years. I still need to file a tax return with the IRS every year, right? And do so faithfully. But, this one is different, though. There was no legislative basis for Trump to come down on TikTok like this at all. There was no, nothing clear there. So what's stoking the flames in the U.S.? Are there legitimate concerns about spying, right? Or is this just clowning around by the Trump administration?
My first instinct is to say this is just Trump trying to throw his weight around, and because it's not the first. He's already put in sanctions, and there's been trade wars and all that sort of stuff in the past kind of year. But I suppose what we tend to forget is that, like, India has banned a number of these apps altogether, for security reasons. So it's not just an element of Trump, like I said, throwing his weight around. There seem to be some legitimate concerns. Now, at the same time, like he tried to ban WeChat and trying to ban it from being downloaded after a certain date on phones. So everyone has obviously just been downloading it now on their phones. But that's kind of political posturing, because that doesn't make sense in the same way that maybe a TikTok does. But you have to wonder, is this going to become a bit more commonplace?
Yeah, I mean, it's just saying that this companies coming out of China do have the chance and the risk of the Chinese government saying, "Give me that data." But I thought the U.S. government could do the same thing, because a few years ago, this came up when I was doing a deal where a business that I was acquiring was operating some software on Microsoft Azure. And this was when I was with BNP Paribas, and nobody had yet done anything where there was data in a cloud server outside of the bank's walls, right? So this was the first time. And the topic that came up was that because Microsoft is a US company, even though the Azure data center is in Ireland or somewhere else, the US has a right to go knocking and say, give me that data, because Microsoft is a US HQ company. The response at the time was like, well, listen, are you really going to say no if the US comes knocking and says, I need that data?
But then we had all the high profile cases, especially the ones where there was that like terrorist attack on the US Air Force Base, where they tried to get Apple to unlock the iPhones of the terrorist, and they wouldn't. And they weren't able to force them to. Is it personal data that they can't enforce as opposed to like corporate data? And I don't know. I'm just thinking out loud because I'm just thinking of that example.
I'd say getting into personal privacy and personal data is a much different thing than corporate data.
It's probably a First Amendment issue or something in the US in particular.
The second point from the article was that European companies and governments are taking note on what raising this wall in the US may do to US originating regulation on tech companies. For example, over-the-top anti-competitive rulings saying break up the big tech companies, digital taxes, censorship, one of your favorite topics, obviously. And is there a kind of a creating some uncertainty in saying that, are we going to try to have a distribution partnership with Google or with Facebook for our products, right? Because of what may happen to those companies, and those companies getting broken up. And having spent a lot of time, and I'm talking to founders every week, they're saying, listen, we've got this deal with Google, we've got this deal with Microsoft, we're going to get our products to market that way. And maybe that isn't the best option anymore for European companies that are, perhaps looking at what's going on in the US.
But as well as that, it's not even the US. Like I said, that ruling from the Data Protection Commission, obviously I've seen all of the conversations around how that impacts on Facebook, but surely that impacts on other companies whereby there's a transfer of data from the US, from the EU to the US. And then you have in Australia as well, because Facebook obviously responded and said they might have to pull out of Europe on the back of that. But then in Australia, you had that ruling that got passed that was classifying Facebook as a publisher, meaning they were liable then for content that got put up on their platform. And they came out and said, well, look, we might have to pull out of Australia as well. So there's, like I said, there's a whole load of regulatory and kind of, censorship and all sorts of concerns happening in different markets, that while it's not directly aimed maybe at some of the tech companies, there's probably knock-on implications in lots of ways on some of the companies that we would work with in terms of their engagement with a Microsoft or where their data sits in a data center. And I think that may be the thing. It may be, okay, well, now we're European based. It has to sit in Europe. It has to sit in Ireland. It has to sit in whatever country, depending on where the country is based and the rules of that jurisdiction. And does that then mean that, does that take away the whole point of having the data centers if you end up having to store it, somewhere locally?
Yeah.
I don't know.
Yeah. No, it's it can be a mystery. The third point was, and this was an interesting one, was fewer points of reference for how non-US tech companies can scale globally. So that's kind of implying, okay, I'm sitting here in Europe and I'm looking at how companies coming out of Asia, Singapore, Malaysia, Thailand, and shout out to Zach Liu in Malaysia, and looking at how a TikTok, ByteDance came to the US, right? And that is a good example of a non-US tech company scaling globally. Will this kind of shut down that option as a reference point to say, okay, how would we do it? How would we emulate what these other folks did? You mentioned WeChat, but are they yet scaled globally? I don't think so. Alibaba, for example, the Alipay is available in a certain number of countries, but I wouldn't say that's scaled globally yet. No. TikTok was a bit of an anomaly, but are we shutting down? I think I'm answering my own question. I don't think that's really all that relevant.
No, I think there's going to end up, to become that global company, you're going to end up having to make concessions in certain markets. So even it seems like the solution, or whatever solution will be offered on the TikTok side, will be to separate out the entities and have a US version of it, and maybe we'll see that. And I think if I can't remember which of the Alibaba and Alipay entities is looking to list, but there's a view that if they're to go to the US, they're going to have to make certain concessions, or that they then choose to go down the US route for greater transparency in terms of their listing and things like that, to allow them, as opposed to listing in Asia, because there'd still be that kind of concern about them. So they're having to make concessions around structures and shareholding and all the things to allow them to be seen as kind of even more legit.
Yeah, and I mean, kind of looking at like what Uber have done on somewhat related basis, and they've said, listen, if we're not going to be able to be number one or number two in any market, we just will either partner or we won't go there, right? Because they want that advantage to go whole hog into a country. And I'm kind of feeling some of the same thing here is that if you're going to scale globally, you kind of have to make some decisions country by country on what to do and what not to do, depending upon the competitive positioning in the country and the regulatory and socioeconomic, principles in each country.
And I was talking to obviously a good friend of ours from an international bank where I used to work in the past, and like we were talking about them being a global bank, but the reality is they're a UK bank with a strong European presence and a limited international presence depending on where you are.
Yeah.
So I suppose this is no different, really. We're saying, for some of the tech companies, it's like, well, actually, you know what? It's not worth the hassle of going into that market. So you just won't have us available in your market if it's going to be that much hassle.
No, I'm with you.
So maybe there isn't a global company in the scheme of things because just not every market is going to work for them.
What the interesting thought here, I'm going to come back to in a second after this fourth point is, the what if scenario. But the last point was that this is creating doubt. This whole context of, the splinter net is creating doubt for European founders eager to get on that transatlantic bridge to the US, as we've talked about a few times on this podcast, especially in the context of Irish entrepreneurs. And there was another good article in Sifted that talked to this point specifically, and we'll put that in the show notes. But it's just that age-old, hey, do we need to go over to the US now? Yes, it's still a massive, big market. It's wonderful, but can you do it a bit differently, a bit creatively, in respect of, oh my God, there's so much uncertainty there right now on how we're actually going to operate in that country, right?
Yeah. Yeah, no, I think it's less attractive than it was a couple of years ago.
Yeah.
Definitely. So no, but on one hand, then there's a lot of innovation going on, and you see some really interesting kind of developments on the financial services side. And you could argue there's still that massive opportunity there, but it does seem less attractive.
Yeah, I mean, it'd be interesting. It'd be interesting to talk to about this is Emmett Kilduff from Eagle Alpha. And we've talked to him a couple of times over the years, and we'll try to get him on the show. And I reached out to him a couple of times to do that. We just haven't been able to arrange it. But what he's selling is alternative data sets to asset managers and to big capital markets players. And his mindset was that, and I'm hoping not sharing his competitive strategy here. He's talked about it publicly, so I think it's pretty well known. Is that the U.S. is a much bigger buyer of what he's selling than the U.K. and Europe. And it's just because of how much bigger the market is and how much more advanced the U.S. is technologically in everyday conversations and commonplace and different business strategies than it is in the UK and Europe. It's just bigger population, more applications of technology. It just makes more sense to go selling it there. If you have another founder with the same mindset, are you now questioning that? I don't know. The last thought on this was the what if scenario that if Trump is not reelected, does some of this crap just magically disappear?
Oh, I don't think so. I mean, no, I mean, you see a lot of the Democrats, and Biden will probably jump on it. They've been pushing censorship and anti-competitive kind of practices and all these things against some of the big four tech companies. So I think you'll still see if Biden gets elected, I think you'll see the Democrats push for the breakup of some of these companies.
Yeah. Was it Nancy Pelosi that was pushing?
She's pushing that hard, and Elizabeth Warren, and like these people are going to get serious kind of portfolios in that government. So I think you'll see it anyway. So what impact that'll have on it then? Hard to know. Will that require Facebook to spin out WhatsApp, in which case it becomes a very a massive kind of payments and kind of communications platform? It possibly makes it more of a competitor and more of a global company then from a WhatsApp point of view. So there could be knock-on implications of that. I would say I don't think it goes away anyway. I think the aggression in terms of the kind of butting heads with China and things like that possibly goes a different route. There is a sense, and there's talk out there that the TikTok issue goes away if Trump is reelected.
I mean,
that that deal just might never close. on
I
purpose.
mean, sensible diplomacy between nation states has been a good idea for centuries. So I think hopefully we'll return to some sense of normalcy there if he's not reelected.
Hopefully.
But yeah, I kind of get your view on that. Do you think that European tech startups should start looking more east than west?
I mean, look, size of market, and there's a lot of interesting markets out there. Obviously, we work closely with companies in Singapore and places like this. I suppose there's always been that sense that America is an easier sell from an Irish company point of view. So I think the transformation and the kind of digitalization of those markets is far more advanced to a degree in Asia.
I'm with you. And I mentioned before we started recording today, a founder that I'm working closely with that looked east instead of west, and it's made all the difference. I think it depends on what you're selling, and it depends upon the deal volume, and it depends upon how willing people are to help bring you to that market, and what they'll get out of it. So I think my word to startup founders is just be a heck of a lot more conscious about what's going on in the Asian markets than just that default of we need to go to the US, and just to think twice about that.
Yeah.
Transferring on.
All right. Nice segue.
We haven't talked that much about TransferWise, have we?
No,
it's always been Starling, Revolut, Monzo, N26 a little bit here and there. But TransferWise kind of jumped out at me recently, and I thought that we should talk about this for a little bit. So this was back on the 10th of September, CNBC reported it, as did a number of other outlets. The TransferWise reported a second year of profit, and their revenue almost doubled. And I took a look at some of the numbers, as I tend to do. So quoting the article, annual revenue nearly doubled to 117 million pounds sterling during the period of 2019 from 66 million pounds the previous year, which is a nice nearly doubling bump. Operating profit came in at 9.5 million pounds profit, which is nice, following a loss of 519,000 pounds last year. And I'm sure that year they were like, oh, we're so close. What's 519,000 pounds between friends, right, Owen?
That's it.
So I compared this to what we talked about a few weeks ago on episode 100 when we looked at the challenges of the challengers. And so Starling was at a $17 million revenue. Sorry, 17 million pound revenue with a loss of 52 million. Monzo at 67 million revenue with a loss of 114 million, and Revolut at 162 million revenue with a loss of 107. So, revenue of 1767 and 162. Loss of 52, 114, and 107, right? That pales in comparison to what TransferWise have done. Now, TransferWise have had a few years head start. Personally, first, I think it's a fantastic user experience. Do you use TransferWise at all?
No, never.
Yeah, it's interesting. They're targeting and have always targeted expats, which I'm one of, but I only started using them in the last couple of years when our pal Dylan up in Hoth, when he pulled out his flashy green TransferWise card. So shout out to Dylan. They have this great follow the money feature that you can see on the app, and I originate transfers from an account in the US to their US correspondent bank. And then from there, I can move it anywhere in the world, and I can see it as it moves through. It gives me, you can move it with us for, $8, or you can move it via Swift for $10, and it'll take 5 days. But do it with us, and we'll do, take 1 day. And it's always the best option, obviously. So it's just, gets into my geekiness a bit about following the money, and it's fun, but it's just such a great experience. Last point on it was that the CEO and co-founder, Cristo Carmen, said, basically all of these Monzo, Starling, Revolut have applied for banking licenses, but they never applied for a banking license. They didn't want to be a bank because all that lets you do is loan out your customer deposits. And they said their customers never asked them to loan out their deposits. And I'm sure Monzo didn't either. But I just kind of saw this as a nice alternative to kind of dig into a bit compared to, again, somebody today asked me, tell me about Monzo, Starling, and Revolut, Pete. What do you think is going to happen there? And I said, well, go listen to this podcast because we did it on episode 100, right? What are your thoughts on TransferWise? I mean, looking at some of the numbers here and how they're doing.
It's a really interesting one because, to be honest, I'm not as close to it. I'm very aware of it, but I wouldn't have known about as it in level of detail until you'd sent on the kind of information for us to chat about. I mean, it's a funny one because obviously everything we've talked about in the past with the other challengers is that they need to lend the money to make the money, but yet here's TransferWise showing clearly you don't. But if you can own a particular piece, we've heard over the years of the kind of unbundling of banking services. Like, this is the prime example of it. They've taken a particular piece of it around FX, and they've gone after that, and they own that.
Yeah,
space.
they do.
And obviously Revolut came out in that same, kind of went down that route initially at the start as well, and that was their kind of piece to it. But they clearly own that space, and they're doing very well with it. And there is no need to go into the wider banking when you do that.
Well, what they are doing is they have applied to the FCA, and they got very simple authorizations a few months ago to do savings and investment products. Right. So I think, to me, this is a bit of a trust play. And I was trying to think about this. Like, I trust TransferWise to move a lot of money internationally. And I'm probably, to all you hackers and fraudsters out there and scammy people, I'm not talking big amounts. So don't go, trying to impersonate me on TransferWise, right? But there's some trust there. That card and the existence of the card in my wallet gives me a little bit more of a feeling of this is real, this is legit. Yeah. So would I think about doing savings and investments through TransferWise? Yeah, you know what? And I would do it way before I would do it through Revolut. And I don't need to get into my feelings about Revolut because I do that way too often anyway.
Yeah. But I think as well, it plays into that piece. So, we've talked about, and the stats are out there as, people only use the kind of challenger bank cards. I only use my Revolut card I have a basic bit of money, and I use it when I was going to the UK and stuff. But actually, the people who want to use TransferWise probably have money sitting on it, like you've said. So the obvious next thing is to allow them to do savings and investments, because that money is probably always going to be short term, but it could sit there for a month or two. So they don't want a loan. That's not the purpose of it. But like that, they might have large chunks of money going through that might sit there for a short period.
It does, because when it's in the U.S., it's sitting with Community Federal Savings Bank, I think, or that's the name of it in New York, and it is a bank and it's protected, right? And while it's in transit, it's in transit, and then it lands in a Bank of Ireland account, on the Euro side,
But even your intention is not necessarily to always to be moving that money in and out of your normal account. You probably just keep that money always on your TransferWise card, in the same way as people tend to use their Revolut or their Monzo account. But actually, because of that, they're able to then do, or it makes sense to roll out those kind of complementary products then to allow you to do some short-term stock trading or whatever. It's fascinating, because often you'd think, the only way to make money is obviously going down the full bank route.
Absolutely. And, we've seen how that just seemed to be the right thing to do for Monzo, Starling, and Revolut. And we know that Starling has probably done the best of that in terms of their risk profile of the loans they've taken on. But we don't need to dig into that again. There was something really interesting that happened on this. You just got me thinking about it. It's that money sitting in the TransferWise accounts. There's a new fintech coming out of the US, I think, that is taking savings and putting it fractionalized into treasury bills or treasury notes to get a little bit of a nicer bump on the savings, like a Goldman's Marcus do and a Raisin do on this side of the pond. That would be an interesting tie-up for those balances at TransferWise to go through. And I just Googled it and I couldn't find which one it is, but I'll find it later on. Interesting.
No, it's an interesting one because they're a very obvious acquisition target for someone with a lot of money then.
Definitely.
With a big valuation. They're the ideal, because actually, why would you buy, I've talked about it before, someone's going to buy Monzo, but actually, why would you buy Monzo when you can buy, if you had the money, you'd buy TransferWise, and you'd stay in that space outside of being a bank.
Yep. So, and you're buying customer relationships, you're buying their attention, you're buying the ability to put new products in front of them that perhaps it would take TransferWise another 5 or 6 years to build up themselves natively, but you can plug in an existing business's financial products, which would be pretty cool. Okay, good. Next one.
Actually, well, I was going to say, while we're on the topic of challenger banks, and it was announced today, I think, the purchase of Tinkoff, which is the Russian challenger bank super app. Yandex. And I mean, I saw it on, I think, Finextra earlier, 5.5 billion. Yeah, this morning I saw that. Like, there's not a huge amount of detail on it. It's a cash plus share deal worth about 5.48. I suppose it's fascinating because Tinkoff are, to me, the closest competitor or comparable in dare I say, not in Europe, but in this part of the world, to WeChat in terms of what they offer. They are a super app with a bank and a challenger bank within it. 10 million customers generating. That's my dishwasher going off in the background. Generating a lot of money. Like that's a very successful business. Now I don't think it's scaled much beyond Russia, but it had been moving out with different parts of the business and some different business lines outside into Europe. So, but again, while we're on the topic of challenger banks, that was a really interesting announcement.
Yeah, and they've been going since like 2006, 2007. So they were one of the early squirrely ones, and they brought in someone, I think from Goldman or JP Morgan on the investment banking side to run the business. When Oleg Tinkoff, who was the original founder, he got into some trouble, and he's been, I think there was an extradition warrant to the U.S., and he's been let out on bail of $20 million or something to that effect. But I think smartly stepped away from the business. The guy that's been running it for X number of years now, 12 years, I think. He's, spinning off, like you said, Vivid Money. I know they set up in Germany. And these are ones we don't usually hear about. And when you told me about it, the first article that came up was from the Moscow Times. And how often do I read that, right? And I did see it in Finextra too as well tonight before we got on. But there's all these.
It's kind of like it's never included in the conversation, but yet they're 10 million customers. I believe they're profitable. That's a big valuation, a big number on it. But as well as that, they are the kind of gold standard to a degree. They are that super app. The bank is just an element of their ecosystem. We talked about that before, and we both are familiar with clients who kind of are going after that ecosystem space, but they have it. They're doing it.
Absolutely.
So really interesting development.
Just thinking that was not my chair. That's your chair. I have been swapping out my office chair every time I record now and putting a kitchen table chair at my desk because I thought that was my squeaky booming chair. So thank you.
Oh yeah, that is me. Sorry. Every time I adjust myself in the seat.
Awesome. Yeah. Well done. Yeah. Mike picks up a lot. When we recorded with Jill Richmond a few weeks ago, her track was a bit low and we had to turn up the volume. Conan Brophy, our producer, turned up the volume on that. I think he picked up a lawnmower in the background. So always fun recording. You got to love it. Last story. You had one more you wanted to mention.
I love this one. I love this one. So for those of you not familiar, Nikola, Nikola, is the listed company. It's listed in the US. It's an early stage company trying to build electric vehicles. So it's a competitor of sorts to Tesla. No revenue, $36,000 revenue last year on consulting fees. They recently announced a $2 billion investment from General Motors. And the day after that investment, there was an article came out, which was a bit of a takedown from a hedge fund company. It was they're a short selling kind of research company claiming that it's just an intricate fraud in inverted commas as they described it, and it's on the back of what is one of the funniest videos I've ever seen of they did a demo of their truck, their first product, driving up a hill. But sure, it turns out that upon investigation, they videoed the truck with no engine in it rolling down a hill and then reversed the video to make it look like it was driving up the hill.
That's
awesome.
It
is bonkers. They did an SPAC, which is a reverse merger onto the stock exchange. And it's funny because this one ties into a whole load of things we've been talking about recently. Like their valuation has gone up as high as 36 billion in the last couple of weeks, mainly on the back of retail investors in buying the shares through Robinhood and just betting on, because it's gonna eventually roll out these products at some point in the future, but it's going after the electric vehicle space. All of a sudden it's worth billions, and it dropped 40% of the share price or something on the back of this, and the founder and executive chairman resigned there just the other day. It's just ridiculous.
It's amazing how quickly you can take a completely fictitious thing these days. What did we talk about a few months ago? The Hertz case, where, and it wasn't that was fictitious. It was just the company chancing their arm and saying, listen, let's try to raise some money and see if we can get some investors in, and they did.
I don't know. growing up or through my college years or whatever, like we heard about, Enron and these sort of corporate scandals, but like we've had Wirecard recently. We have this ridiculous one. Like these things are playing out in public, and for some reason people are not picking up on them. I don't know how this corruption or fraud is happening like in front of our eyes.
Well, there was a little thing in 2017 called ICOs, that I remember well, that, loads and loads, 85% of them turned out to be scams or just failed.
And there is a negative association with these SPACs or SPACs, as they're called, special purpose acquisition vehicles, where it's a private way of taking a company. Yeah,
public. You set up a company with no specific purpose. You give it a nice name. You raise a bunch of money, and it's the partners or the founders of that company that are well-respected individuals that they know they're going to do some kind of deal with it, right? And then it's saying, okay, let's then do a reverse merger. We're going to find a company and use that public money that we raised to be able to acquire something else. And there's a few companies that are in the rumor mill right now about who's next in the queue for the SPAC.
Airbnb. Yeah. It's just that they've managed to get a kind of negative association like ICOs at the moment. So, it's no surprise, I suppose, in one way that this Nikola thing is all coming on the back of this.
Let me test you on something on Airbnb now that I got your attention, and see if this works.
Oh, actually, before we move on to that, just to say, SoftBank did not invest in Nikola, which I was shocked when I Googled that.
You kind of almost half expect that, they did.
I expected it. I was like, is this my crazy SoftBank story of the week? But actually, no, it wasn't this time.
All right. Try this one on for size. This is from Y Combinator. This is Michael Seibel, who was on Invest Like the Best with Patrick O'Shaughnessy a couple of weeks ago. And I listened to that and I loved it. And so Michael was talking about the way to do a real deep dive analysis into the problem that a startup is solving. Okay. So the way that you think about it is, how frequent is it? How intense is that? And what is the willingness of someone to pay for you to relieve that pain? Frequency, intensity, willingness to pay. Okay. Think about Airbnb. Okay. Is there a frequent problem that you're looking to solve with Airbnb for you?
For me, no, not at all. I haven't stayed in an Airbnb.
And do you feel like, well, it's not that much of a problem. So is it that intense? No. And do you have a willingness to pay for Airbnb? Given the first two answers?
I would if I was looking to stay somewhere and it was an option. Like I have looked at it. I have an account. I tend to just stay in a hotel, but I have looked at it as an alternative on those occasions when I've been looking to stay somewhere. So I would be willing if it felt like if it was what I was looking for.
Turn it around. Say you had a property, an apartment in a city that was a rental property for you, right? Would you frequently have a problem of trying to get that rented?
Yep.
Would that be an intense problem for you?
Absolutely.
Yeah, because you're losing money every day. And would you have a willingness to pay someone to look after that for you and relieve that pain?
Oh, absolutely. Boom. Yeah.
Business model of Airbnb. Yeah. It's the other side, right? It's not the side that you and I all know. So loads of VC interest right now, and for the last couple of years in networks, marketplaces, where you've got these two-sided creators of supply and demand, and I get all excited about these. And that was just the test that Michael Seibel from Y Combinator did to Patrick O'Shaughnessy, and during the podcast, and I'll put it in the show notes.
I really like
he was kind of Patrick
really
O'Shaughnessy, to save face, tongue in cheek, said, "Oh, we practiced this beforehand," and Michael's like, "You fell for it completely." But it was a good one. But yeah, I'll stick that in the show notes.
That is a good one.
We do have one more announcement to make, don't we?
Yes.
So our wonderful sponsors, Top Tier Recruitment, are retiring as sponsors of this wonderful podcast. And we would like to express our warm thanks to Paul Smith and Laura Smith, who have been not only wonderful business partners, but have become incredible friends of ours over the last few years, for sticking with us through thick and thin, and absolutely love them. And I don't know what we do without them. So Paul and Laura Smith,
couldn't have done it. Thank you, guys.
So we're going to be we're going to open this one up, but we'll take that to the next level at another time. But thank you to Paul and Laura so much. You're wonderful people.
Yes.
All right. I think that's a wrap for tonight. Yeah.
Yeah. I need to get back to. Well, it's a bit late now, but I need to get cracking on next week's newsletter.
I need to get cracking on Cobra Kai.
Oh yeah, I've heard it's good. So let's see if you can bring that into a topic, one of the newsletters.
It is absolutely brilliant, and I'm sure we can find an angle there. I absolutely love it. You know, it's the 30 years later. What happened after Karate
I've seen
Kid.
The trailers. It looks really good.
Yeah, it's brilliant. So
actually, I saw a great article the other day on I must have been on Medium or something. I must send it to you because it was about how Netflix, because Cobra Kai isn't new.
It was on YouTube.
It was out like 2 or 3 years ago on YouTube. Yeah, but it's about how Netflix distribution model can effectively take shows like that and make them popular, make them the must-watch thing.
Maybe they could do that with Money Never Sleeps.
Yeah, I mean, we haven't talked to the Netflix guys in a few weeks now, but I mean,
we'll get the documentary going, right?
We're looking for a new sponsor. Yeah.
Who's going to play you?
For me, it's always been a choice between like Ryan Reynolds or Ryan Gosling. Either of those two works for me.
Awesome. I'll tap up Clooney for me. Yeah.
Tag them both.
Yeah, I'll tap up Clooney. No problem. Or my pal Matt. You know, from Southie. Anyway, listen. Check you later, pal.
Pleasure.
Have a good night.
Always. All right. Take it easy.
That wraps it up, folks. Thanks for listening to us try to figure out why the world does what it does. The links for the stories we covered this week are in the show notes for this episode on moneyneversleeps.ie, so check us out online. Also, you can subscribe to our Money Never Sleeps newsletter at moneyneversleeps.substack.com. If you're enjoying Money Never Sleeps and want to see it continue, make sure you hop on over to Apple Podcasts and give us a 5-star review. Remember, if you or a colleague need help attracting and retaining great talent for your fintech or financial services company, it is highly advisable that you build a relationship with a team at Top Tier Recruitment, as they really know their stuff. You can find them at toptierrecruitment.com and tell them we sent you. As we said, a special thank you goes out to Paul and Laura Smith at Top Tier Recruitment for sticking with us as such supportive sponsors and friends throughout way more than 90 episodes. Thank you, Paul and Laura. You're both legends. And don't forget Conan Brophy from Create Sound. He mixes and edits each episode for us and is an excellent media man to get in touch with when you're thinking about launching your own podcast. As for me, I help startups get their products to market, get customers, and finance their vision. You can find me on LinkedIn, Twitter, or at norioventures.com. And you could follow Owen on Twitter at OwenFitzgerald9. Finally, till next time, thanks for listening. See ya.
Money never sleeps, pal.